Let's look at the junior gold miners. So first off, read this disclaimer carefully. Then do your good deed of the day by liking and subscribing. So junior gold miners, they are having a very bad day today if you are a bull. However, I do think that this could be a very interesting long-term opportunity. So 12% from the 52-week low and 29% away from the highs. So let's just look here at the junior gold miners. So GDXJ is the ticker. We are very low. This is a very low price for gold miners. The interesting thing about gold is that it's one of those things that could do well in shit hit the fan scenario. So it does have some tendency to perform well when other parts of the market are not performing that well. Looking here at gold miners ETF, the GDX, you see that in the early part here of the financial crisis, it crashed, but it formed the low here on the 20th of October 2008. And that was way before the rest of the market bottomed out. Yeah, so if you look here at the SPY, and let's find the low, that's March 2009. So that's a huge difference. So yes, when times really get bad, gold miners, they actually perform much better than the stock market. So we are at key horizontal support. Let me draw that in. This is just it's a super interesting level. So we have support back here, as you can see. So long term, a very long term horizontal support on the weeklies. On the dailies, no support really, except you do have a bit of a cluster back here. But this is primarily more of a longer term thesis. Looking at weekly RSI, we are at an interesting level. You see that back here, here, and here. This RSI level formed the lows. Looking here at the 20 week purple PPO. That measures the distance between price and the 20-week moving average. We are at key long-term support on the weeklies. On the dailies, we are very oversold here on RSI. This is a very interesting level. So yes, let me go into my notes. So we are at horizontal support on the weeklies. And we also have and RSI and then on the dailies. So I will give the technicals, let me give them a 7. This is just very bullish. But to be clear, this is primarily a long-term thesis. Short-term, the bears are very clearly in control. And the bears clearly have momentum. Having said that, would I sleep comfortably being short GDXJ? Definitively not. Yeah, if I had to buy calls or puts, I would definitively buy calls. I would not at all feel comfortable going on a put here on GDXJ. It's just way too low. So let's look at seasonality. So looking to the left there, red is the average over the last 10 years. Blue the last 7 years, and green the last 5 years. So the seasonality could get a bit weaker. Looking at the seasonality for October, a terrible start to October so far. But looking historically, this usually isn't that bad of a month. Hence, a lot of the bad stuff could already sort of come out of the gate. Yeah, November though is not a green month for GDXJ. December has recently been green, so the seasonality here, it is a bit messy. I do think I will give the seasonality to the bears with a -3. So let's look at the fundamentals. Let's first compare XME, the metals and mining ETF, with the GDXJ. So looking at performance, a massive underperformance from GDXJ. Beta is 1.06 versus 48 on XME, PE 18 versus 9.17, virtually no yield, 0.6 versus 2% yield. And let's now compare GDXJ with the GDX. So now we are comparing the large cap miners with the smaller miners. So beta is actually, a bit lower on the XME, GDX. That is to be expected. Price earnings is interestingly a bit lower on GDXJ. Yield is higher on the GDX, but that is not any surprise. Let's quickly look here at the holdings. Yeah. So here you can see the breakdown. Canada has many actually don't know. They are very big in the mining industry. So I will give the bulls the fundamentals. I give them a 3. I think that overall this is pretty interesting, especially interesting to see that the junior gold miners have a better valuation than the GDX. So let's now compare these two against each other. Let's first here get some correlations. So let's get the GDX. We want to know that. And we also want to look at the correlation with gold, GLD. So these are long-term correlations that look at the weekly data points. So minus 9% correlation with S&P 500. So almost no-ish correlation. That is very good in a market-neutral portfolio. With the GDX, we have 93%. But only 33% with the GLD. That is way lower than I expected. Looking at daily data points, minus 21% with the S&P 500. Almost perfect correlation with GDX. With the GLD, we are now at 91%, so sort of more what one might expect. And now let's compare GDX with GDXJ. Like that. So when it comes to RSI, this is a bit of a messy territory. No, oops, we need to do GDXJ versus GDX. Like that. But still, yeah, messy territory on RSI. Looking long term, we have seen substantial underperformance from GDXJ. But there might be somewhat of a rounding bottom in development. If that forms, that is very bullish. That could mean that long term, the junior miners will outperform the big miners. Something potentially a bit supportish here, to be determined. We did bounce from support here on RSI. Looking at seasonality, it does not favor GDXJ. Looking at October here, recently though, going back to 2019, the junior miners have a bit of a tendency to outperform the GDX. November, recently though, seen some outperformance, and December, recently seen outperformance from GDXJ. So that is overall bullish for the GDXJ. Let's look here at the GDX. So GDX, if you want the more safer, quote-unquote, gold miners, then these are also at long-term support. So let me draw that in. We have support back here, here, here. Could argue here as well. This is a very interesting level for GDX as well. If you look long-term, that is. The seasonality here is pretty interesting to the left. We could have a bit of a bullish period into November. Yeah. Overall, I do think that this is a pretty darn interesting time to consider the GDXJ. So I give the bulls a 5 on relative performance. We end up with 3 in favor of the bulls. We are at horizontal support on the weeklies. We also have RSI support on the dailies. So yeah, this is just simply way too interesting. So we are put stops. So recently I've been building some longer term positions. So whenever you invest in the market, you need to differentiate between long term and short term. And I think that in this case, this is definitively a long term thesis. I do think that by buying GDXJ here, taking on a smaller position, I want to build the position, of course, more carefully always, especially the longer term positions. This is an interesting level. Could it go lower? It is fully possible. But then again, you are definitively not at any risk of buying the highs here on the junior miners. So yeah, this is just way too interesting. And as we saw before, in previous bear markets, if you get that situation, then the junior miners substantially outperformed the S&P 500. And the correlations that we saw here with the S&P were also very interesting as far as building a more market-neutral portfolio. The key difference between this type of investment versus trading is that when you trade, you just have a shorter time frame and you are willing to also just quickly get in and also out of a position. In this case, I will have a smaller position without a stop loss level. That is purely because this is part of a long-term portfolio, which isn't intended for those kinds of buy and sell mechanisms. Even though you have a long-term position in GDXJ, there's no rule saying that you cannot trade short-term around it. Hence, you could get into the options market, or you could just buy the GDX outright and do some more nimble trading around, a long-term trade. In that case, you could buy at the key low support, sell when it becomes a bit frothy, and go back and forth. Yeah. So thanks for watching and have a great week ahead.